Hey, what's up, everybody? Happy Friday. It's that time of the week. It's time for the Security Token Show. That's right, Kyle and I, we have the latest and greatest news in tokenization of real-world assets, RWAs, and wow, what a week it is. A packed show. Oof. Kyle, how are you this week, my friend?
Herwig, I am pumped to get into another week of news. I am about to kick off quite a few weeks of travel. I'm heading to Toronto, and then I'm heading to Bitcoin Vegas. So doing a lot of crypto-related traveling ahead. So just going to enjoy this final week of peace before a month of travel.
Some nice weather here in Miami until it's going to get real hot this summer, I'm sure. But, well, with that, let's get into the market movements. All right, we are back with another week of the biggest news in the RWA space with some special guest contributors this week. Regular returning guest Nico Pantelis, a partner of Blue Bay Ventures, a leading RWA firm. Nico, how are you?
Good. Happy 100K, guys.
Happy 100K. And, of course, Dr. Bob Murphy, how are you? The chief economist over at Infineo. Welcome on. Please introduce yourself real quick for many of us watching that may not have met you before.
Sure thing. Yeah, I'm the chief economist at Infineo. I have background. I've been in academia. My research interests were on money and banking, and then I wrote some early pieces on explaining the economics of Bitcoin. And then now I'm at Infineo, where we're putting life insurance on the blockchain. We currently have over $500 million of value on chain.
Amazing. Yeah. Infineo, the leading, insurance, life insurance tokenization provider out there. Pretty cool stuff. We're glad to have you both on the show with this big news. Starting off, Kyle, with some disappointment, right? Something that we thought had real momentum going in on the Hill, if you will. The Genius Act was not smart enough to pass. Kyle, what are your thoughts?
Yeah, well, anybody that's listening that does or does not know, the Genius Act was the bill that was going through the U.S. Congress regarding stablecoins and allowing for banks to use stablecoins as cash on their balance sheet, amongst many other things. It did have a set of requirements around what that stablecoin needed to look like and some of the qualities of how they needed to structure it, including being 100% backed by U.S. Treasuries, for example, no fractional reserve on the actual underlying asset, but a bank, therefore, could actually then fractional reserve the underlying stablecoin the way they do with deposits. There was certainly a whole lot more to it, but it looks like it did not pass in the Senate. I don't think that means that it's dead by any stretch of the imagination. We are going to see something come out, but word on the street is that there were some competitive products that caused a little bit of disagreement within the bipartisan initiative to push this forward. I certainly don't know if private companies launching stablecoins that are directly tied to the current administration are something that they are entirely jazzed about. But I don't want to speculate on rumors. All we know for sure is that the Senate is going to have to retake a look at this, and maybe there are some changes that are going to come. So everything that we knew for sure about what these stablecoins are going to look like may be up in the air. Herwig, back to you.
Yeah, any thoughts from our guests here?
Well, sure, I'll jump in. And so, yeah, as an economist specializing in banking, stable coins have always been of particular interest to me because there is a sense in which it's like a bank, economically speaking, whether it fits the statutes of the definition that, people give their fiat to it and then they can now trade things that are ultimately claims on the underlying fiat. And that's exactly what a bank is, right? You put in $100 bills in your checking account and then you can go around town, which you're effectively, quote, spending or transferring claims, on the banks having those reserves. And he's right that, the big issue with this stability of that is, the fractional reserve nature of it. And so that's always been a longstanding thing. Like Elizabeth Warren and others in the U.S. have been pushing and saying, hey, this is turning into banking, but it doesn't have all the consumer protections that conventional banking, right? So that's the angle they've been taking. And then, yes, this particular twist of paying interest or not. I mean, at Infineo, just to give a quick example, I've been theoretically studying having a stable coin that's backed by cash value life insurance and how that could work. And I concluded the only way we're going to penetrate the market is if we, pay interest on it. Like that's how we would get people to switch over and hold our token as opposed to someone else's. And, it was shot as like, oh yeah, but there's securities regulations and that, that would make that a different type of thing. But now, that's on the table and we've got the YLDS and so forth. So I think this is the wave of the future. And I agree. Yeah, this is not dead. They're going to go ahead and fix that. But conventional banks are worried about this. They're realizing, this could really steal a lot of our market share very quickly. So that's the issue.
That's just them trying to protect the moat.
The banks should become apps on these blockchains. So I think it's a small win for the CBDC camp out there.
That's a good point.
I think the Warren types are the CBDC people. It's also a small win for the European Union, in my opinion, because they were opposed to the Stablecoin Act from the US. But yeah. I also think that this will eventually go pass through, and the stable coins will flow over the world in a few years, in my opinion. So.
Yeah, they're going to have to get it right, and I believe right is allowing yield to be shared to the customer. Why are we delaying the inevitable? What's going to happen? And we already see the rise of stable coins backed by gold on the Tether side, over 7 tons that they're holding, right? So I think actually a life insurance cash value backed stable coin is a pretty cool idea. But moving on, we also saw some big news that caught Nico's eye. Jump Crypto taking a stake in Securitize and leading tokenization engines, as well as marketplaces and brokers and TA and everything else that they do. Also backed by BlackRock, the most popular choice for financial institutions, which makes this investment from Jump Crypto pretty interesting. What do you think about this one, Nico?
It's very important. It's in my opinion, one of the 2 missing links in the whole, especially our RWA space, where we are still running dry on liquidity. We need these big liquidity providers in our ecosystem to get this thing going. And Jump is, of course, at the forefront in TradFi and in the traditional crypto markets, but not active in the RWA space. So very happy to see this thing moving forward, and hopefully they will put millions and billions at work in our arena. Let's see.
Yeah,
very positive.
I mean, Jump Crypto is a big market maker, to your point, and that's what the industry desperately needs is distribution. So hopefully bringing in these types of players. We've been begging for this type of player to get involved in RWAs. So it's exciting to see them at least certainly taking note of it and taking a stake in the game.
Yeah.
Yeah, just real quickly, the circles I move in, I more interact with often more conventional, like economists and policy wonks and things like that, whereas you guys are more, in the weeds on this stuff. And it's just a simple point, but it really helps when someone's skeptical if I can say, oh, BlackRock's into this stuff. Like all of a sudden, I know that's stupid, but that's unavoidable. And so just every time I see headlines like this, and especially like we were saying with the stable coins, the fact, that was Tether is like 140 billion or something like that all of a sudden people can't dismiss it. Whereas like 10 years ago, when people knew I was working on, the economics of blockchain, that was just like this little sci-fi hobby, like guys who build Civil War things in their basement or something. So anyway, for what that's worth.
Social proof, as we say in fundraising.
Bob, ever since Larry Fink joined our camp, the world has turned 180 for us. We've been shouting tokenization for many years, and nobody was hearing.
Right.
And then all of a sudden, Larry Fink comes along, and everybody's like, "Hey, let's get this tokenization thing going." So yeah, it really helps if these types of guys come.
Yeah, well, the mainstream is a big deal. That's why I think this next piece of news is pretty interesting. We saw the owner of Bed Bath & Beyond Inc., starting to get really active exploring the tokenization space. And recently they completed, they also own Overstock, by the way. And so they completed a O Reg CF campaign They still, I think, an opportunity, a window. They increased the amount that people could participate in after they hit their $250,000 goal here to basically buy into the O token, which will naturally list and is powered by tZERO. So I think it's very cool. Reg CS, as we know, have a year-long lockup period mostly. So I don't think we're going to see it necessarily trade very soon, but it goes to show you that tZERO is active, and more importantly, that Beyond is taking advantage of this interest that they have in this exposure to tZERO. And by the way, they're not stopping there. They're also Beyond owns Buy Baby, I think it is. Buy Baby is doing a baby token offering as well on tZERO. So I think there's rumors going around, and then Marcus Lemonis, a big figure, was brought in. He's been a big proponent of all this, talking about this. I think there's rumor to talk about, maybe one day seeing the BBB token, Bed Bath & Beyond, go on to tZERO. Rumors are swirling. What's everybody think on all this activity?
Herwig, do you, because I can see in the headline, read in the headline, that's an IP token. Do you have any idea what it represents? It represents the IP, I would guess. But any more specifics around the token?
Yeah, I'm not sure exactly what Buy Baby does. I can do a quick search. I think they do a lot of as it sounds
it's an online retailer for baby products, strollers, car seats.
So maybe they have their own custom product line that they're launching that maybe you get exposure to. As we always like to say, do your own research on this show, but this is all information available. I think you can go find out on tZERO.
But these are the interesting use cases, which probably there was no market to find in the traditional markets for these types of assets. And suddenly with a blockchain, throw it out there and see what gives. This is opportunity, in my opinion.
Yeah, I agree.
It looks like it's just the intellectual property, though.
That's the thing. What is the IP angle, and what are you owning the IP, and are you getting a part of the royalty slice?
I see there's maybe a revenue share component here. An annual dividend equal to the annual royalty fee paid by Beyond Inc. to the company. So it's a royalty fee to use the IP, which is equal to 1% of the net sales multiplied by a fraction of the outstanding shares.
Interesting.
So this is just kind of another
royalty stream.
But
token.
Look, $195,000 out of the $250,000 goal has been reached already. So they have had success on getting this initial launch. It's just, again, tZERO has done similar structures with their tZERO token, where they kind of structured it in a unique way, to put it in politically correct terms. And so it'll be interesting to see how this token performs. But they've done a good job of building a really strong community behind that token. So I wouldn't be shocked to see the success of Buy Baby.
Interesting.
I'm just concerned that Elizabeth Warren's now going to have the press release and say they're trying to tokenize babies, and we got to stop this.
They're tokenizing babies, these guys.
They'll rule it out. Well, there's another proponent that maybe Elizabeth Warren isn't a huge fan of, and that's Robinhood. Robinhood has been being very loud about the vision of tokenization and what it's going to do to markets, and now they are rolling out tokenized U.S. stocks to Europe. Which is my biggest gripe that I'm going to keep complaining about, is that you're going to see tons and tons of tokenization platforms for American stocks that Americans cannot take advantage of. We have to use Web 2 NASDAQ and NYSE while everybody else is going to get to use the Web 3 version. I think it's ludicrous, but I think it's also awesome because Robinhood being US based is going to be able to put a lot of pressure on porting that over to the United States and working with the regulators and showing all the benefits of this stuff. But it's giving to me just a freebie to Europe and everybody else that many others like Ondo and Swarm and Dinari and many more, Stoker, are all looking at as a mega trend, right? To bring outside capital into these American stocks, because they just don't necessarily have access to the full library via whatever exchange they have available to them in their home country. Not to mention the 24/7 settlement, the peer-to-peer transfers, the borrowing and lending, and many other capabilities that come with it. What are your thoughts on Robinhood's movement into Europe and this trend in general, guys?
Nico, can you comment on how difficult it has been in the past to invest in U.S. stocks from European jurisdictions? Because I've never lived there. Like,
That's
I've never tried to invest. Like, is that a real problem for the retail investor? Is it a real problem for the high net worth investor? Like, at what level does this become a real problem? Is it a problem across the whole stack? And this is obviously Europe, where it's probably the most accessible versus a lot of other countries in the world.
Yeah, that's what I wanted to say about this news. There is no withholding any investor in Europe to invest in U.S. stocks. None. So
it's possible today.
For me, it's just an optimization thing where you do it as your Robinhood. You just plug into a blockchain on the back. On the backside, and
so you wouldn't expect, like, if Robinhood wanted to do this traditionally and just offer stock trading the way that they do with their normal app, you wouldn't have expected there to be any issues with just offering that to Europeans. This is kind of a willingness thing that they want to force this kind of adoption, as opposed to because they have to.
No, because Europeans, I think even so in the US, you guys also have access to interactive brokers, huh? I think. Everybody, also retail. The retail can hook on. So no, Europeans have access to most markets in the world. They have access to Asian markets, Indian markets, even African, Middle East markets. I can trade on there. South, I think Latin America, even the Canadian market, all the US markets, even pink sheets. So no, there's no withholding any Europeans from trading wherever they want. I think this type or this problem especially is applicable to Asian countries and African countries, but not for the Western world. So no, I think it's just a margin optimization from the Robinhood side, and also I think a preparation to be fully onboarded when the other part, which is missing in the ecosystem, which I was talking about, the first one is liquidity and the other one is regulation. So if regulation comes through, then they're fully, locked in already in Europe and maybe some other parts of the world, and they just have to click switch on US 2 and let's go. That's in my opinion what is going on. They're just preparing for the big outroll also in the US.
I think the highlight that you got to take away from this here, Kyle, is that Europeans don't have a problem accessing U.S. stocks. They are now going to have a better way to access U.S. stocks than Americans.
If they can trade fully, around the clock and over the weekends, there's some edge, you could say, for European investors, because they can trade on blockchains and they can sell their Tesla stock in the weekend if Elon Musk has a crazy tweet over the weekend or whatever happens. They can act in front of. I don't know if Robinhood will do this. Switch on full trading like crypto is for stocks, tokenized stocks. I don't know, but yeah. I think I heard the CEO mention that they're also going to go 5 days trading in the US, I think.
Yeah, that's already happening with Robinhood and also across the NYSE and NASDAQ. They're all moving to it. I think it's going to be more about some of the other benefits, the potentially instant settlement or redemption out, the ability to go into crypto and other products easier, potentially borrowing and redeeming, or even being able to move those tokens around eventually. I think that's where they're possibly looking at, but they haven't revealed much. We know that they acquired a license in Lithuania, and they, bought Bitstamp, I think it was, right, a big crypto exchange. So they're gearing up for. I think it all comes together. It's crypto is just as big as a part of this as the tokenized stocks component eventually, tying it all together into one on-chain, on-rails platform. Dr. Murphy, any comments on all this?
Yeah, I mean, just the big picture. So I agree with you guys that there is this odd thing where, like I'm sure you guys know, building things that there's a lot where you can only do it for accredited investors. And it ostensibly is to protect the little guy and whatever. But then on the other hand, it's like, oh, so if there really is a good investment that rich people want, we're going to legally make it that only rich people can get it, which is kind of goofy, right? So in general, even if it is, this particular one's not catering to Europeans and giving them something they couldn't get elsewhere, still, this trend of blockchain allowing for people to get access to things that perhaps synthetically that traditionally they can't, I think that's a good thing because it's giving more options to people as long as there's transparency. And then just real quickly, it is absurd that, economists talk about there's price discovery, and that's one of the functions of having, financial markets. And it is weird that, for 2/7 of the total time, we're not allowed for that to work. It would be like if grocery stores were always closed on weekends, and that kind of wouldn't be convenient, right? So anyway, it is just funny that for cultural reasons, we don't get this alleged benefit from the financial markets for 2/7 of the time.
Yeah, and maybe there's also one other angle, that is that if you're a new operator from a brokerage side, traditional brokerage equities in Europe, it's a very saturated market, so all the players are set, like in the US mostly. And then, if you want to target new pools of capital, maybe you look for the big pool of crypto capital in Europe, because there are big players also in Asia. Maybe look at that to get things going and cooking in Europe on that side. So
the only counterpoint to the conversation that we're having is actually, certainly around trading hours, is actually, the one that I've seen that's compelling is that I think it's the latest research I found was about 60% of the New York Stock Exchange's trading volume happens in the first and last hours of the stock market being open.
True.
Right. And so there is certainly an argument around focusing and concentrating liquidity. Right. And so opening it to 24 hours, does that either spread out the liquidity across a broader time scale, or does it also prevent potentially those catalyst points, right? Open of the market and close of the market are really easy, like bookends. You're like, all right, I want to put my trade in by this time, or I want to make this decision because I know that here's the cutoff. Does that kind of force people to trade? Does that actually create more liquidity counterintuitively than if you were to spread it out over a 24/7 market or over a 7-day market, if we use kind of the Monday, Friday as an analogy or analogous to the open and close on a day-to-day basis? It's an interesting thing to think about. I'm not sure which side I fall on this. Obviously, I think 24/7 markets are great, but I find it to be an interesting counter argument to this kind of open it for trading 24/7.
But you should also consider that not everybody lives on the East Coast. So if we're talking about connecting global markets to the U.S., there is something to consider around that as well, right? But one final topic for our market movements here. This is a pretty big one, and we got an economist on the show this week. So I wanted to bring up the TBAC stablecoin report as the U.S. Treasury's Borrowing Advisory Committee report on stablecoins here. It really is just a meeting. The meeting notes were shared, it looks like. And guess what the hot topic was? The concept of yield-bearing stablecoins. Okay, both sides of it. Of course, bringing up that on one end, we were discussing earlier how banks, if people end up moving to stablecoins, this could have quote-unquote systematic risk, I think, as people like to say, as the buzzword, as we potentially have less liquidity and credit available from banks as a result of that. But on the other side, we have a mandate on the U.S. to grow demand for the dollar, right? This is the whole point of stablecoins being endorsed. And apparently the reports or the research obviously suggests that if you were to offer yield-bearing stablecoins, the demand for stablecoins in the U.S. dollar in general would increase dramatically more and therefore it's an interesting, argument on both sides about what's important. I'm going to pass it to you, Dr. Murphy.
Okay, yeah, sure. I'll just keep my remarks brief here. So, yeah, I mean, the big picture elements here involved are pretty straightforward. That, for one thing, the growth in stable coins. Well, let me back up. Prima facie, stable coins are interesting, right? Because the original impetus, for Bitcoin and like a lot of the early adoption was you can't trust government issued fiat currencies. You got to get out of that crap and get into, something dependent. Oh, there's only 21 million. This is great. They can't print more of them. And so one might not have supposed early on that, one of the biggest sectors and largest market caps is going to be, a blockchain based asset that entitles you to US dollars. Like, why would anyone want that? Right. You might have thought. So it is interesting just how that evolved. But yeah, again, so part of the different competing interests here are when interest rates on treasuries were extremely low, it wasn't that big of a deal. But then now when, they've surged up, Tether's market, their business model, they're making boatloads of money just through arbitrage. They're sitting on something that's a great business model. And as I alluded to earlier, I think people are realizing this can't persist. We're going to have to pass through, some of these yields to our customers or the people holding our tokens to induce them, to add it to their portfolio. And so then the problem, though, is, again, that conventional banks or whatever are realizing, the people right now holding these stable coins, it's largely just people in the blockchain space who want to, get out of something volatile and just park their money, but without, leaving the blockchain dimension. But down the road, as things more become tokenized and blockchain-based finance just becomes a bigger thing, and, BlackRock's doing, everyone's doing it, it becomes more conventional, like using email or something, then this is going to be a viable alternative with all the economies of scale. You don't have to have brick and mortar buildings. You don't have to have guards at the bank and a bunch of tellers. So this is a real threat. And like I said, people like Elizabeth Warren, whatever that we joked about earlier, she's going to cloak it as protecting the consumer because we don't know what they're doing with your money behind the scenes. And is it going to be there when you want to, redeem your stable coins? But obviously it's partly to, protect the established interest. So that's where all this is coming. And then, yeah, and the last thing is, as you said, partly why the Trump administration is pushing this is, the solvency of the U.S. Treasury is, they keep running up the debt and they have to get more people to hold treasuries. And then he's got people in his inner circle who are really friendly with blockchain telling him, well, you could really open this up if you make it, if they can pass through some of the earnings, then lots of people are going to want to own stable coins on their balance sheet, like hundreds and hundreds of billions more than right now. And so the people issuing them will have to load up on treasuries to show they have reserves. So I think that's, the various parties here and how they're grappling with each other.
Very, very well put. It's going to be a very interesting narrative to keep tracking here, especially since the Genius Act did not pass, which definitely would have set a lot of things in motion already. Kyle, Nico, any closing thoughts?
This is, I can understand that traditional players see this as a threat at the beginning, but in the end, this is a major opportunity for these guys because they have all their infrastructure and all their clients, and they can just make a DeFi app and start distributing all these, these yields to their customers to their own wallet or their own maybe L2 or whatever they want to set up. But just make it a new business, and then the whole world opens up for them. Not only US people, but the whole world is all of a sudden a customer of Bank of America or JP Morgan. I don't know what these guys, why these guys are thinking about it like this. I think it's just a front that they're putting in front people like Warren and such to keep things, within their check. But this wave is coming, and it's a big opportunity for the banking system. That's how I look at things.
Totally agree. Herwig, anything else left on our list?
No, we're going to keep moving because we got more of the show to move into. So we got a great interview coming up just now here with Jason. Let's move on with the show. Thanks, Bob and Nico.
Thanks, guys.
Welcome back to another interview here on the Security Token Show. Today we're covering something really interesting because we've covered on the show before. We've talked about it in the What's Drippin' newsletter, but now we have 2 out of the 3 core founding members of this new thing that we now know as Lynq Network. We're joined by JD from Arca Labs and Alan from tZERO. Gentlemen, how are you today?
Doing great, Jason. Great to be with you today.
How are you? Thanks for having us.
Absolutely. Thanks for coming on. Really exciting news that you guys are working on here. I've explained it in the past, as mentioned, right? You guys are doing yield-bearing settlement here, but I think it's always easiest to hear it directly from the source. So give us a quick overview on what Lynq Network is and what you're working on.
Awesome, Jason. Thanks again. Well, today we're really proud to announce the addition of one of our newest and most important members of the consortium we've been creating. Today we announced Crypto.com is actually going to be one of our launch partners to help support liquidity on the platform we've been building. So we've been building alongside of our partners tZERO and tZERO for the past 18 months now, a real-time yield-bearing settlement network that leverages a couple of really important pieces here. The first piece that it leverages is a technology that's known to the marketplace. We're working with tZERO, and tZERO's developed a technology that was really the standard for real-time settlement within banking infrastructure. We've taken the technology and we've retrofitted it for a broker-dealer infrastructure in partnership with our key partner here, which is tZERO, which operates both a broker-dealer and a special purpose broker-dealer that play very specific roles in the implementation that we're actually delivering.
Awesome. Let's talk about those roles, because there's three of you involved here, plus a few others on your launch partner side. But maybe starting with Alan here, tell us about what that differentiator is with a special purpose broker-dealer in terms of how it plays a specific role in the Lynq Network.
Terrific. And we're really delighted to partner with Arca, tZERO, and other stakeholders in this ecosystem. What we put together is a really unique offering that takes some legacy know-how, technology, and use cases and applies them in a very new and I think very forward-thinking frame to enable real-time settlement of obligations using tokenized securities. As tZERO, we are powering the system in a couple of ways. First, as a broker-dealer that supports customer accounts and the platform where the functions are going to be executed, including through our alternative trading system. And secondarily, as a custodian through our special purpose broker-dealer that was approved in Q3 of last year and operationalized later in 2024. The special purpose broker-dealer is one of only two in the United States, and it allows us to custody digital asset securities, of which these fund interests will be one, in a way that really delivers end-to-end seamless broker-dealer powered solution to the marketplace that is very low touch from a user perspective and delivers the functionality and security of broker-dealer supported digital asset security custody.
Very nice. Appreciate that. And that makes sense. I think that plays a role, right, with this new thing that you guys are working on called yield in transit. Essentially what my understanding is, and correct me if I'm wrong, but it's if I'm a user on Lynq Network, I'm going to be, instead of settling maybe in cash, I'll settle with this new Arca ran liquidity fund. But JD, maybe tell us a little bit more about TFND. I know it runs on Avalanche, but what's its exact role here?
That's exactly right. So we're fortunate enough to have had a background in actually creating funds. Most people know of Arca from its trading operation, but we also have had significant experience in creating registered products. Arca began creating registered products dating back to 2018 when we created the first 40 Act fund that issued its shares as digital asset securities. So that's well in advance of what people have been doing lately. Franklin Templeton and Wisdom Tree and BlackRock. We really paved the way for that. So over the course of that time, we've gained experience in operating these funds and understanding the properties of these actual digital asset securities that are created. In this implementation, we've actually taken a private fund, a 506c fund, and that fund itself issues its shares on the Avalanche blockchain. The Avalanche blockchain then obviously is important for us, not just because of its stability and speed, but also for the transparency that it actually allows for users to understand how many shares have been issued. So they can always see a one-to-one balance between what's actually been issued by the fund and what's on the platform. The shares themselves actually are held in custody by the special purpose broker-dealer that's operated by tZERO. Those shares are then replicated on a private permission blockchain, and they're allowed to be transferred back and forth between counterparties in order to satisfy obligations. One of the cool parts about it, Jason, is that using this fund, which has a portfolio of U.S. Treasuries, it actually generates yield, and that yield actually gets passed back to its users, and done so in a very, very cool way, The Tacit team actually created a technology, an algorithm that, believe it or not, is actually patent pending. That technology is able to go ahead and analyze the amount of time that a user, an institutional client on the platform, holds that actual position for, and then can allocate that yield at the end of the day based upon the amount of time you've had it. So in the most simplest form, if you held it for half a day, you receive half the interest that's generated, and that's then delivered in kind via a token that's then sent on the Avalanche blockchain. It's actually a security token, and then held in custody, and then those shares are represented again on the platform. So the yield in transit properties are really important for the industry, especially as most of the users out there right now are clamoring for interest in yield, and that's one of the main reasons why you start hearing a lot about these yield-bearing stable tokens and other things out there.
Yeah, and we believe that we are delivering that product in a compliant way that satisfies the, among other things, the securities laws rules as they stand now with respect to yield-bearing stable coins, which we believe constitute securities for federal law purposes. And we have a frame that's broker-dealer enabled, that is that special purpose broker-dealer supported from a custody perspective. That's really the only end-to-end location for fully tokenized digital asset securities that exists, and to deliver the seamless user experience. And it's also supported by Arca, thoughtfully putting together a compliant private fund product and then offering and maintaining it in a compliant way.
Fantastic. I want to dive into a couple of things you guys just touched on here a bit deeper. But for anyone that's watching on the Security Token Show, we're going to move on to the next section. That being said, this interview will be fully available on YouTube on STM TV Official. So go ahead and check it out there.
Wow, absolutely love what is happening over at Lynq Network and an amazing set of partners, Kyle. This is the future, yield-bearing real-time settlement networks. But Kyle, there's even more news we have to cover beyond the market movements in these great interviews. We got another one coming up too with Dinari. But why don't we get right into it? I want to have some conversations here with you about funding and M&A activity this week. Last week we talked about how it was heating up. And I got some more news for you, Kyle. We got an acquisition from Infineo about data company Tractive, okay, to do AI technology for private markets, presumably using all of the great Infineo data they have on their platform for their clients. We also saw BVNK receive an investment from Visa, okay, none other than Visa. And if you don't know BVNK, they're a stable coin provider, so no doubt things are really heating up after we saw that bridge acquisition by Stripe, and we're seeing more and more players enter the stable coin game. And finally, Kolb, C-O-L-B, Kolb Asset raised 7.3, roughly 6 million Swiss franc over there, Swiss dollar, whatever it is, to launch pre-IPO equities on chain. They're a tokenization engine out of Switzerland, Kyle, but that's a big number. For a seed stage, or seed extension, they called it, for tokenization platform. So a lot more activity, Kyle. What do you think?
Yeah, well, shout out to Infineo, still getting the job done. They've raised a lot of money. They've secured some really big client contracts and have been a stalwart in the industry for got to be close to a decade now. So it's great to see that they're still moving forward. They're still making acquisitions. They're still scaling up their platform. I just want to give them a shout out for doing really great things there. And I think that was the big headline of these top three, Herwig.
Yeah, well, moving on to something more exciting, I think even, is new tokens. There's no short amount coming. Okay, and I want to start off with Superstate announcing their own platform called Opening Bell, where now both private late-stage issuers as well as public companies can go and leverage their platform to essentially bring public equities on chain, starting with Sol Strategies. We talked about this offering. I actually won my company of the week a little bit back, essentially offering an investment opportunity in RWA into Sol staking. Now they're hopping on Superstate's Opening Bell, and I imagine they're going to attract many more great companies. So I just love to see that news, Kyle. But also Red Swan's bringing an offering on Hedera to market the Atlas Opportunity Fund. Okay, so Obviously, do your own research. As we always like to say on the show, these are all token offerings for you, very regulated stuff for you to check out more details on. But it's worth mentioning that an S1 was filed, folks, for tokenizing Microsoft shares. It's big news because I was just talking earlier about how it's so annoying that American investors can't take advantage of tokenized stocks, tokenized public equities. And here you go, Bermuda Capital proving me wrong, showing that they got plans for more in the future as well, according to their announcement. And it doesn't stop there. We're going to see at least some carbon credits get tokenized with Northern Trust. We know Northern Trust has been very big on tokenizing carbon credits with their Matrix, I believe, platform, Matrix Zenith platform. And now they're joining the Hong Kong Monetary Authority's Project Ensemble that we've talked about for their pilot, which is cool news. Citi is partnering up with SDX to use their platform for custody and tokenization to bring tokenized private market assets to global investors. So good on Citi for partnering up with SDX there. And finally, Kyle, this one may be the most interesting, certainly last but not least, a new Kyrgyzstan gold-backed US dollar pegged stablecoin called USDKG has been announced for Q3 of this year. Any thoughts or takeaways or comments on any of these new token offerings that are coming to market in the near future?
I just think it's really cool, Herwig, that like Kyrgyzstan is launching a gold-backed dollar, right? just the concept of that. Like, if you would have went to 1971 or when we removed the gold backing from the dollar, 50 years later, we have other countries all around the world that see the value in $1, and then they actually are creating their own dollars that are almost white labeling the dollar and then backing them by their own gold. I just think it's fascinating. It's a really, really interesting time in economics where I just don't think we've seen like derivative fiat products before. It's kind of co-branded, co-backed in a lot of ways, and I just think this concept is fascinating. I think there's a lot that my brain is the wheels are turning on what the potential implications of this could be. I think it's bullish for the US dollar with respect to other countries that just see the value of having this implemented in their transactional systems, but recognizing the value of having it backed by something other than just the physical printer itself, especially when you have a third-party issuer, a different government or a different company that is going to be minting these dollars. So it makes so much sense, but it's just quite a financial structure to wrap your head around when you think about the economic side of it. And that one really caught my eye just for those reasons. I think that there's some really good ones in here. I don't want to just kind of walk through the headlines that you talked about. Exciting for Superstate that they're bringing these types of pre-IPO companies to market. I hope that they can scale that. They started with the harder part in terms of figuring out the liquidity on the treasury-backed product. So potentially now they can funnel those investors into these types of tokenized securities, which I think is a really interesting opportunity. Distribution clearly being the hardest part of this process on the token issuance side. So maybe they have some of that solved already. I think that's the other big one that I wanted to keynote here.
No, I think Superstate's making huge moves. Class A player here. Obviously, Robert Leshner has his experience on the crypto side, but also now merging traditional finance into it. And it was pretty institutional facing before with their current products. Much more yield focused and treasury type focus. But now the fact that they're getting into public equities excites me, Kyle. I'm excited to be able to hopefully track that soon on stm.co so we can see that kind of activity. And it's never a dull moment in RWAs and crypto, especially in terms of innovation and product. So we'll see what kind of action that gold product gets, stable coin backed gold. But I do have some more announcements to finish up on here, Kyle. We saw the Deutsche Börse integrate an FX platform into a digital exchange called the 3DX digital exchange for crypto. So they're not getting into the game with 360T. There's also Hadron by Tether, their tokenization platform, integrating chain analysis for risk detection for I guess, assets that want to use that. to set new compliance standards as well. Konevsky by JP Morgan publishing a paper with MIT, their MIT DCI, Digital Currency Initiative, I believe it stands for, to propose essentially bank token standards, as we now see, banks getting into the stablecoin game. And also Konevsky's digital payments is worth mentioning, expanded to MENA, supporting over 8 banks over there, showing the continued global dominance of this division within JPM. The European Central Bank, they've launched their own platform for their CBDC for the euro, supposedly citing 70 organizations as a part of it, going to show you just how collaborative the Europe tends to work in this way as they're structured. And then also Malaysia getting into the game, proposing their own framework for tokenized capital market products, actually with consultation running up until June 16th for anyone that wants to submit any commentary to Malaysia's Securities Commission. And finally, Custodia Bank has teamed up with Vantage to start trialing and testing out on-chain cross-border deposits on Ethereum. Okay, very cool stuff on the sort of banking side of things. Kyle, any of these headlines you want to comment on?
Well, it's interesting. I think that the European Central Bank launching this innovation platform, it'll be wild to watch how these 70 organizations are onboarded. I know that they've had this MiCA framework and they've been working on a lot of these types of token issuances and things like that. But CBDCs are coming. So I guess they're really trying to focus more on these centralized, controlled currencies as opposed to having the private sector dominate the space. With that, that'll be fascinating to watch how the US versus Europe maybe differ on these things and what that means for trade, what that means for geopolitical stuff. I think that's going to be a headline to watch over the next, call it 5 years or so. And all these others are great announcements as the industry keeps pushing forward. Herwig, I love to see these news. It's wonderful things happening in tokenization, and it's definitely in that too big to fail component at this point for a lot of the stablecoin transactional stuff, blockchain transactional stuff, and tokenization as a whole.
For anyone who's been watching this show for a couple of years with us now, they definitely have witnessed the transformation this industry has gone through. And it's very exciting times, without a doubt. In fact, every week we got to pick one of these companies to actually make a company of the week. But before we do, we got one more interview to jump to, so let's get to it.
Welcome back to the interview section of the Security Token Show. This week we have a new guest, a returning guest actually, Gabe from Dinari. How are you today?
I'm doing well. Good to see you again, Jason.
Likewise. Thanks for coming back on. You guys, it's no secret, you guys are doing really well with tokenization, specifically US equities, making them accessible worldwide. But you guys are going to be adding more fuel to the fire here. You guys just raised $12.7 million Series A at VC and Blockchain Ventures, taking the lead on that. Tell us a little bit about your experience, maybe in this new crypto Web3 tokenization environment that we're in. What has your experience been like raising capital this time around?
Yeah, look, as you know, because you've been tracking us for a while, we started back in 2021, back when the words tokenized securities was like Voldemort. Like you're not supposed to utter those words at all. And so it's been like a really big slog, I think, over the last 3 years, working diligently, working on the compliance, the broker-dealer, all these kinds of things to get to where we are today. And then, of course, as we got traction and as the new administration came in, things shifted rapidly. Now it seems like everyone's talking about tokenized securities. And so, suffice it to say, we went out to raise a Series A, and we were firm that we wanted to raise 10 million for our Series A. Obviously, it did not go according to plan. There were people that really were very excited about what we were doing, like Fidelity and VanEck and these guys, and that's just such a different take and experience than what it has been for the last 3 years. So we're really excited by Hack and Blockchain They've been a huge supporter of us. They have put a lot of trust in the founders of this company to see this vision realized.
Makes sense. Makes sense. I appreciate it. And you're right. The sentiment is definitely very different than it has been in the past around this technology, but also just even within the Web3 space, I think people are finally understanding real world assets, or at least that's the term of the year that people want to assign it. But regardless, tokenizing securities, assets that are tangible, right, and have value. So, people are getting it. We're moving forward, and as we track a lot of it too. And so it's been nice to see that growth. I'm curious a little bit more about what's next for you guys now that you have, this, big chunk of change, if you will, to deploy. How do you plan on using it to scale your operations, Dinari's reach, et cetera?
Yeah, some of it is very aggressively boring. So we've done almost no marketing for our APIs that allows anyone to essentially become a broker dealer and offer U.S. stocks anywhere in the world. And so we thought we're going to have to do a lot of marketing and get these partners on board. Turns out it's actually been the opposite. We have so much inbound that I no longer could do it all by myself. So we had to hire a few people to help me. We brought on Anna Wróblewska, who spoke at your conference as our chief business officer. And she's been phenomenal in sort of standing up and handling the demand on our platform. And then, of course, we have to continue to add some new features on the product side of things. And so it's a little bit product and a lot on the sales and marketing side, making sure that every one of our customers are successful as they launch their own version of tokenized stock offering.
Makes sense. Absolutely. And then you guys are making it very easy, very frictionless to make it possible. It's pretty much API based is my understanding. So it makes sense, right? People want to give this in their own, branded way, but you guys obviously protect, taking care of all of the operations there. So fantastic. We loved having Anna at Tokenize this. So for anyone watching, if you want to check out that Tokenized Stocks panel, we'll have that up shortly. Great. So we talked about how, again, these are U.S. equities, public stocks that are being tokenized, ETFs as well. You're making them available to non-U.S. investors. What is maybe the feedback you've gotten from some of those customers, and what regions do you think are showing the most demand here?
Sure. So it's been interesting because we have partners in Latin America, like Argentina, Brazil, that are doing phenomenally well. And it kind of makes sense because they're already used to transacting in stablecoin down there. And so the fact that they can use the stablecoin that they already have now to get exposure to U.S. stocks without ever having to go to fiat, without having to trust anybody, they can just do it directly themselves. That's shown a phenomenal amount of demand. I would say that surprisingly, UAE and Turkey and some of these places in the Middle East have been phenomenal in their response in gain access to exposure of U.S. stocks. And then I'm really actually proud to say that we've launched into regions with partners like Facet in countries like Pakistan, where we're the first ones ever to offer U.S. stocks to end users in any form, tokenized or otherwise, to the average customer in Pakistan. And same thing with Indonesia and a few other places in Southeast Asia. So really just this mission of bringing the exposure to the world's best assets to people who traditionally don't have access to them is being realized, and we're really excited about that.
That's really cool. And Facet, for anyone that watched the Security Token Show last week, they just got their Pakistan license, sandbox license to do tokenized gold, and I'm assuming now with tokenized stocks as well with you guys. So that's fantastic. Is there a difference in approach as you kind of go to region, or is it all kind of everyone kind of just using the same approach for you guys in terms of how you're going after some of these partners?
Honestly, it's been like I said, all inbound so far in terms of partners. And so it's really been figuring out, are there new licenses that we have to get in certain regions, or do the partners that are coming in have those licenses? It's figuring out all of those things is the most complicated part. But
Right.
generally speaking, we always find a solution. Obviously there are some countries we just can't go into, that's on the OFAC list and things like that. But outside of that, we really try to make it work.
Fantastic. Awesome. Well, shifting gears here, some critics might argue that tokenizing equities could blur the lines a bit between, TradFi, crypto, potentially also introducing some systemic risk. Just curious on how you would respond to that, your thoughts on that.
Oh, the world's going to be tokenized. And so eventually we're no longer going to make a distinction. I really believe that blockchain and blockchain-based companies is going to become synonymous with fintech companies in the next decade. And we're making that big transition. And whenever we make a big transition, the question is how do we transition from the traditional infrastructure to this new and better infrastructure in a way that doesn't harm customers, in a way that is as smooth as possible in its transition. And the industry is reckoning with that right now. And the truth of the matter is once exchanges like the NYSEs, like the NASDAQs of the world, can all of a sudden shift into a tokenized infrastructure, perhaps we're now looking at exchanges that can't, that's not just about exchanging public stocks, but it can be all sorts of different assets. Because as we all know, the world is tokenizing everything. And so really for the vision of Dinari and where this is all headed is that we want to be one of these exchanges that are very trusted, that are fundamentally blockchain based, so that we can be the home to all these tokenized assets, and the users will benefit because all of a sudden they will be able to move in and out of public stocks, private stocks, bonds, debt, treasuries, whatever it is, interchangeably. And this tokenization being the great equalizer and the universal protocol is an exciting future that we're building towards.
Oh man, I'm just excited and pumped, and I'm about to dive in even deeper on this because I think you just brought up some good points. But for anyone watching on the Security Token Show, I'm going to pause it here because we do have to move on to the next segment of the show. If you want to watch the rest of this interview, it'll be on STM TV official on YouTube.
All right, Herwig, and this is the moment everyone's been waiting for of the show. We are 30, 40 minutes into the show now. They've sat through all the headlines, everything going on in the news, all of the amazing interviews with wonderful companies, but we know why they stick around. We see the analytics. We see why the user retention on the show is so high. That's because everybody is constantly waiting with bated breath for the indomitable, the number one, the ineditable Companies of the Week segment. This is the segment where Herwig and I alone, there's no one else in the voting committees. This is Herwig and myself saying which companies deserve recognition for doing something unique or innovative or exciting in the industry that we wanted to shout out for our Companies of the Week this week, and of course, give them a nomination for the Companies of the Year award at the end of the year, where we pick one of those 100+ companies for that winner. This is almost 6 years running now. So Herwig, without that further ado, 283 episodes in, I'm still not tired of your choice. Please give me yours for this week.
I mean, dozens of companies to choose from. It makes our job very difficult, but also exciting. We don't just pick the ones with the biggest brand or maybe did the biggest tokenization, although sometimes we do give them the award for that. But as you said, Kyle, it's our chance to pick somebody that we think deserves the spotlight, deserves our little boost. And this week, I want to give that to none other than Beyond Inc. So as we talked about earlier on the show, they are the parent company behind Bed Bath & Beyond and Overstock, which is originally what was behind spinning out essentially tZERO. So they have a stake in tZERO, and they have been proving out the technology themselves, as I like to say, eating their own dog food by actually putting a couple of unique, innovative products tied to intellectual property on tZERO, first successfully now with the O token by Overstock, and now soon, hopefully, with the Bye Baby token that they're going to be launching. Again, not a recommendation or advice to invest, but simply pointing out that this company is doing what it takes to prove tokenization is valuable, putting assets on tZERO. It could mean and spell that there is more coming to tZERO from the Beyond Inc. portfolio. And it's worth mentioning, I'm a fan of Marcus Lemonis, the guy from The Profit. He's a successful entrepreneur, and now he has gotten the bug of tokenization, if you will. And he's been very loud on Twitter. And I think we're going to continue to see him help kind of mainstream this technology, which we need more voices like that, not just homegrown from the crypto field, if you will. So Kyle, that's my choice. My company of the week, Beyond Inc. Congratulations.
Bye, baby. I think that's a great choice. tZERO getting into the crowdfunding game. How about that? We were we've been down that rabbit hole before, Herwig, with STM, and wish them all luck. They've already done some of that raise successfully, so that's exciting, and hopefully they're able to raise the full thing and really prove this use case. It does show that they also have some good distribution. I think that's a wonderful component here. And Marcus Lemonis is close to the South Florida area, so major shout out to him at the helm, getting stuff done, rooting for them, rooting for him for sure. So I think that's a great choice.
Graduated locally here in Miami from high school, I believe. Also you, Kane. That's awesome. Kyle, it's not just me who gets to pick a beautiful company as the winner. Who did you pick this week?
Well, Herwig, look, partially I have to give you credit. This is inspired by the conversations we've been having on camera and off camera around tokenizing stocks, tokenizing securities, specifically public market stocks. This is something I've particularly been fascinated by for so many years. I think we had done those reports on the trading volumes of all those FTX, now fraudulent, but at the time they seemed legitimate, tokenized stocks that were moving all around the world and tracking those volumes. And I was fascinated by the arbitrage opportunities between those shares and obviously the distribution. And I think that's going to be a key factor in getting people into these markets. And it's a huge component of tokenization, right? You can have your stable coins, you can have your crypto, and you can have your stocks and investments all kind of in this one technology stack, all supported by a particular vendor. But one of the problems has been that the U.S. regulatory structure has made it pretty difficult to allow these features to U.S. investors. And so for that reason, I want to give my shout out and company of the week to Permuto Capital. Permuto Capital is the sponsor or the issuer behind those tokenized Microsoft shares, as well as some other tokenized stocks where they specifically listed an S1 on the public markets, like an IPO of a wrapper that holds Microsoft stock that they're going to have tokenized so that they can have these stocks on blockchain markets. And so I think that this may be the only way to actually do it in a regulated way for US investors at this time. They may be able to kind of pave this way and do it and do it in a more streamlined manner in the future. But for now, they're doing MSFT, Microsoft, as well as Apple, and their own stock as well, I believe, AVGO. But these should be tokenized, and we'll see the extent with which they can interface with the DeFi economy, but at least they could be brought on chain. And since they're doing an S1, it should be allowed for US retail investors. These could be real tokenized stocks of US stocks that could trade 24/7 theoretically on a blockchain market. And so for those reasons and through all the hassle that I'm sure it is to file an S1, I certainly don't have the experience to do that. Shout out to Permuto Capital.
Huge award, Kyle. I love that choice. As you know, this topic is a serious one at the end of the day. And you're right. Maybe they have figured it out. If that's the case, that's huge, possibly company of the year huge if this works out for them that way. So going to be watching them closely. That's really excellent. Really great choice. Congratulations to Permuto Capital.
And with that, that's the rest of the show.
Yeah, that's all we got for you fine folks this week. Of course, we'll be back again next week. If you haven't checked out our new platform from STO Market, now over at stm.co, go check it out. We've got everything going up there and more features launching very, very soon. So watch us as we build in real time. But also, we're starting to add all the Tokenized this content up on our YouTube. So go check out all the great panels and keynotes and other interviews that we captured over in New York City just a few weeks ago. In the meantime, we do appreciate your support. If you like, subscribe, please share. Sharing really helps. Get this out to somebody you think that would appreciate the show and tell them to give it a listen. In the meantime, hope to catch you all again next week. Kyle, any closing thoughts on your end?
Hey, I'm happy to be here. As I mentioned, I'm going to be traveling. I should be able to make the show every week. Certainly Toronto next week. I believe I'm home before Friday anyway. But if anybody is out and about in the conference circuit, hit me up. I'd love to meet up, hang out, and talk tokenization.
Right on. Well, with that, everybody, have a great weekend and happy tokenizing.